Okay, guys, let me share with you or join with me for a short walkthrough for this example. As I backtested, well, I want to give you a hint for how to have a better timing of a trade. What confluences can you look for? So here's this video. This is what this video is made for. Of course, going into a day, you should have first a pre-week analysis. Since you are starting with a pre-week analysis, you should start. Oops. You should start first on a weekly time frame. Mhm. Weekly time frame. And going back, it is this week. Oops. This one. So you got to have an analysis. Now, when you are having your weekly analysis, you should have list of this one. You have market condition, market condition, and then weekly bias. Weekly bias means where do you think the next weekly candle, the single candle, where do you think it is going to? Not close, but going to. And then market condition. Now, in this market condition, you can use this to understand and learn from the market itself. Will there be a volatility? Will there be a low volume day? Will there be a highly manipulated week? So that's how can you at least have an information. How are you going to behave for the week? Of course, since you have these things with you, it's easier for you to understand and have a predetermined basis of which day are you going to focus on taking a trade, which day are you going to de-risk, which days are you going to sit on your hands and not engage with the market. Now, on this specific week, what is our market condition? Of course, again, we are going to refer back into this. It's June 3. Now, we have the PMI, we have the non-farm payroll on Friday. It's highly manipulated. So, which means we can expect volatility on this day, especially on Friday, which is it's very volatile. Wherein during this week you can have a trade on this Monday, Tuesday, and then Wednesday. It's Wednesday, Thursday is somehow kind of in a bit of range because this range is engineering liquidity for this type of move coming into Friday, which is non-farm payroll Friday. Coming into this, we have the weekly again. The market condition we can expect Monday's trading a good day since it gives us a hint that there could be a volatility in the market. There's a participation. And for our weekly bias, where do you think market could go? It's higher, as you can see in here. This is specific candle. We've seen a rejection from this fair value gap. Now, as you can see, power of 3. That next week it will open right there in this candle. So where do you think if it's going higher, it should first swap power of 3, manipulate lower, and then trades higher. That's our principle. Now, since it's Monday, it's manipulation of the week. It's quite contrasting because for the week it's going higher, but specifically for the day Monday, we're expecting it to go lower. How? How come it's going to go lower? Now power of 3. When we zoom in, if we zoom in for hour, this is the rejection lag prior to Monday. Monday, we can see it right there. For hour, we have a volume imbalance. We also have a 1 hour sell side inefficiency buy side. Sell side imbalance buy side inefficiency. So that's the narrative. And it's quite also on a lower time frame market structure. It's in a premium level. So it's reasonable for this price action to rebalance first before going higher. Rebalance or should rebalance those CB. Now coming into Monday is how it gets interesting. Oops, we aren't able to update that. So update na natin. Okay, weekly analysis. Now coming into a day, we have weekly analysis. We have pre-market analysis for the specific day. We should also have the market condition, and the daily bias. And oftentimes you can have session bias. Session bias because on my type of trading, I can only trade the New York AM session. It could be where in my case, I could have a bias going higher, but my AM session could turn out like a consolidation. So afternoon will have the impulse. So I won't be able to participate during my time of trading. That's what I mean by session bias. So we don't force things in here. Going back, what is our again for a specific day we also need to refer back to this. What is our market condition for this specific day? We need to take note of the news, time of news, and of course our bias for the day coming in. It's going lower. This is our bias coming into the day. This volume imbalance in here and here, CB. Now, since we are trading lower time frame, we need a better structure that is more relevant for us, which is this. And we also need to take linears and flows. So looking here, our bias for the day is higher, is lower rather, but our structure, as you can see in here, is going higher. So we need to see, we want to see a structure shifted to go lower, and it happens right here. Nangyari siya dito. Yan. When it creates a displacement lower. Again, let's go to 1 minute time frame. Ito na yung, this is what we, uh, this is what this video is for. You see if it's recording. Ayan, recording siya. Still, that's good. Now, we have a news on 9:45. This is news. We have news in here, and we also have news by this time. Yes. Then, we are anticipating, we are going higher. We are not engaging because price is still insisting going higher. We are not shifting bias, not just because it doesn't offer going lower. Not because price is not showing a willingness to go lower. It's like we are shifting now a bias to go higher. We don't do that. We stick to our bias until we are proven wrong. Let's take it longer. Bias until proven wrong. Because what happens when you are wrong into bias is the worst thing that could happen is that one, you lose because you're wrong, or two, you miss a move and it won't kill you. Now, once it creates a displacement lower, like this one, this could mislead you to taking a long when it's just going lower, going higher, or manipulation for a move going lower. Now let's read this candle by candle on a 1 minute time frame. Opens at 9:30. We put a line at 9:30. It took a high right here. So we don't, after trading at 9:30, it's a high. And then this one. And then this candle. But we don't shorten here. If you shorten here, just because of this candle, you are being impulsive. And then trading higher. Then this one is a manipulation candle. Then right after here, it creates a high and then displays us lower. So how are you going to create a trade, to take a trade? Once this candle close, should you FOMO in and take trade in here? Should we do that? Should we do that? No. Should we do this? There's a lot of risk in here. No, no, we don't do that. So we wait for price to retrace back. We are waiting for two things in this case. We are not simply taking this one. We're not going to do that, especially in this reversal. We are going to, what we want to see is this. We see a displacement. It's either two of these things. It's a retracement to 62% level, or a PD array, or a fair value gap, which is this, or a recursive pattern like this. We're going to take a trade in there. That's the pattern we are going to trade. Now, let's see the possibilities we can have here. One thing that we can be very confident in this, that we are going to revert back on this fair value gap is the news right here. So that's the first entry. First entry that we can have in here. Is this one, the 62% retracement level, and this, which can give you this entry, this one. Actually, let's take note of that. Let's take note of that. Another is when you feel like you are already losing this, where can we have our next entry? We can also have this entry right here. This one. Yes, we have this reasonable. We have volume imbalance in here. Put it right there. And then another thing, if we take this that again, of course we're not going to take this. If we are going to take this one, it's very dangerous to take this one. So how about this one? Should I take this? Can I take this? Yes, we can trade this, enter here, and stop this here. This one we cannot have a trade in here, but this one. And this one here, we are not trading this one. We are not trading this one to this one. Because if we trade this one, it's very low. It's very low. We are not taking this one. We are not taking this one. We're taking this one. But we can take this one. Oh, hindi na natin pwedeng i-take. We're not going to take this one. So that's it. For entry reasons, the main thing is we don't blindly enter in here because it opens too much risk for us. Yes, not doing that. And if is in out of limits, maybe we can see a trade from that position. You can see may mas magandang trade pala dito. This is reasonable. Like this. 3.5. So that's all for today. Until next time, be safe.